Welcome back to another YouTube video. Today we're going to be talking about profiles. Now we're going to go right back into this. I know I took a long break. I just got a car, a CLS AMG 53, all maxed out, every package. You're going to see it's beautiful, red interior. Bro, yeah. So I've been dealing with insurance, but before that I was dealing with my taxes. I had a very stressful week, so I didn't have any time. I also went to New York to meet with Tanya Trades. If you don't know her, search her up on YouTube, Tanja Trades. But now we're back into the boot camp. Today we're going to be talking about one of the most important factors in trading, and that's profiles. Now I'm going to be straight up with you guys. There's two profiles that we look at. Now there's four in total, two base fundamental profiles, and then two lower time frame, intermediate time frame profiles. Now I'm going to explain what I mean by that. But first we're going to look at the two main profiles. We have a market maker buy model, and then we have and then we have a market maker sell model here. So this is one profile, this is the other one, same thing, vice versa. Now in this there's going to be patterns that we look at, like first and second stage accumulation, smart money reversals. This is where the concepts start to get deep, right? First stage accumulation, second stage accumulation, buy side liquidity taken, smart money reversal, first stage accumulation, second stage accumulation, right? So those are all things that we're going to pay attention to, and we're going to break down what it is. We're going to stick with the market maker buy model profile to explain right now, but we're going to break down what it is and what it means, and what to do when you're in this stage, 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 and this stage. But to be able to identify a winning trade, to be able to identify this beautiful winning trade, you need to identify where you are in this. Why are you going to look for a long if you're in the accumulation phase? You know what I mean? So these are the two higher time frame profiles, the narratives, the what we're going to be looking for and trying to find in price action. Now, inside of that, price action will move in two ways: accumulation, manipulation, distribution, or vice versa. Accumulation, manipulation, distribution. We're going to stick with the bearish one. Or accumulation, expansion, retracement, expansion. These are two profiles that are always going to play out. One of these two are going to play out. Now, we're going to trade according to those profiles. According to what happens in price action, that's what we're going to do. So for example, if you see that price action is this profile, we're not going to look for price action to rip towards our target at 930 right away. We're going to look for 930 to manipulate away from our target and then form our entry up here or here. But if we are in this profile, we want to see 930 rip towards our target right away. You don't want to see the manipulation. You want to see the manipulation come from the reaccumulation of orders back to the distribution leg. So price action is going in its direction at that volatile time, but then it's going to retrace higher, way higher, into a premium of that distribution leg to grab more liquidity because it didn't manipulate first and then trade lower. So, for example, when you're taking a trade and you have multiple fair value gaps here, right? How do you know not to go down here and then take the trade versus go here and then take the trade? Well, you look at what happened previously. Did we do this? If so, we're going to go down here, then take the trade. If we went like this and took sell side, then we're going to go like this. Why? This goes back to narrative and the reason and liquidity, because we already took the liquidity that we needed. We just need a little bit more and then push. We push up higher. But if we didn't do this and it was flat and it didn't take liquidity, it's going to move down lower and then turn up higher, taking internal range liquidity. These are all factors that you have to know and be able to adapt to your trading. That's why I'm telling you that trading is not just taking an entry model right away. You're not just going for a market structure shift fair value gap, right? You're not just looking at this, because this might not need to form if it's going to be this. You might want to find a turtle soup. You might want to find a breaker. You know what I mean? So that is where profiles factor in. Now I'm going to show you how to trade according to these profiles, and then I'm going to show you how to identify them. So to trade according to these profiles, the one thing you have to focus on is obviously which profile that you're in, but obviously what section in the profile are you in? Are you in the accumulation, the manipulation, or the distribution? Are you in the accumulation? Are you in the expansion? Are you in the retracement? Or are you in the expansion? To identify which one you're in, you have to identify the one you just finished. So for example, if you want to identify this, you have to identify these two. That's why people say the power of 3 is the power of 2 equals the power of 3. So the power of 2 equals the power of 3. It's not 1 plus 2, plus 3. It's 1 plus 2 equals 3. And what do I mean by that? We're trying to find the distribution. The distribution cannot happen unless this is together. Now, this can happen on its own. Manipulation can happen after accumulation, but distribution cannot happen without accumulation of orders and manipulations of buyers or sellers. So it's not 1, once again, it's not 1 plus 2 plus 3. It's not accumulation plus manipulation plus distribution. It's 1 plus 2. It's accumulation plus manipulation equals 3 distribution. So A plus M equals D. So to find D, we need to be able to find A and M. So first, we're going to identify when does price action form accumulation often? During overnight, when there's less volume. When does price action manipulate more often? When there's more volume to manipulate traders fast. When does price action distribute? After these two has happened. So we're going to use today's example. Today, it was the day before FOMC. It's December. It was very messy, but I still caught a beautiful trade. Now I'm going to put my executions on, and you'll be able to see the trade that I did take. And you can see right here, I took the execution here on the inversion fair value gap after taking sell side, and we targeted these highs up here. And you can see we took that beautiful trade today in this really ugly price action, but we still won it with the right stop loss placement. So how did I identify this trade? Well, you can see prior to 9:30, we have what? Accumulation of orders. Okay? And on top of that, you saw that midnight open, and I'm going to just draw it out roughly. But midnight open is about here. We are below midnight open. Remember that video I made? We are below. Majority of our move has been down. So our target, our bias, and this is for a different video, the ones that I already made to how to identify bias. That's not what I'm going to be talking about right now. But I already figured out that we're going to go higher. Okay? That I already knew. So when I see 9:30 open and then rip lower and then take sell side liquidity and then rip back up higher right away, I know that that's manipulation. We go to the 15-minute chart and we see, look at this 15-minute candle. That's 9:30's 15-minute candle right there, okay? Right here is 9:30. Let me just fix the screen so you can see it a little bit. 1 second. But that is 9:30's candle right there, 9:30. You see price action rips down lower, takes it, and then bodies up here. At 9:30, we manipulate. We've been consolidating. We move lower. So even in the higher time frame, consolidation, manipulation, the last leg of manipulations at 9:30, and then we turn back up higher, targeting the highs before. So you can identify that it was manipulation because of the factor that it moved lower. So at 9:30, using this, you can see that the profile is this: accumulation, manipulation, distribution, reaccumulation, expansion, reaccumulation. Sorry, let's do this again. This is the profile: accumulation, manipulation, distribution, reaccumulation, expansion, reaccumulation, expansion, reaccumulation, expansion. So this is what the market profile looks like that we're trading in: accumulation, manipulation, distribution, reaccumulation, expansion, retracement, reaccumulation, expansion. What is that? What is that? Both models are there. And if we draw out what happened previously, what does that start to look like? the market maker buy model, the 2-factor profiles that show up. Now, if you missed this entry where I got it on, you could take this one, the second stage accumulation. These 3 points of reference are where you're going to find entries. Anywhere else, you can look for IOFED, but other than that, you don't want to find market structure shift for value gaps because that's not when they're supposed to form. So you can see that I identified that that was the profile, and then I capitalized off of it by taking this long. That is trading profiles. That is identifying profiles. And to be able to identify profiles is to see what happens with price action. You can see another example the day previously. We have accumulation throughout this whole session, accumulation. 930, manipulation above all those highs. And then after that, distribution back down to the lows. So you can see here, accumulation, manipulation, distribution. Right? That's another example of power 3. Power 3 happens a lot more often than the other one. But you can see here, we have 930 pushes up higher, then retraces, then pushes up higher again. Why do we have that at 930? Why did we not manipulate at 930? Why did 930 rip up higher? Well, because we manipulated prior to that. Look in the bigger picture. Accumulation, manipulation, distribution. So I'm not going to anticipate 930 to manipulate because we already did that there. So I'm going to use the expansion profile where it expands, retraces, expands again. And that's exactly what happened here. Factoring your trading off of profiles. Once you identify what profile you're in, it's so easy to catch a trade. That's why I tell you that entries are 10%. You need to find the bias, the narrative, and the profile. Other than that, guys, I hope you guys found this video insightful. I'll make another video about this in the future, but this is a very important video, so don't skip over it and study it more often. But study these profiles: accumulation, manipulation, distribution, accumulation, expansion, retracement, expansion, and then the market maker buy and sell model. Okay? These profiles are the most important things to study. Other than that, guys, thank you guys for watching. I'll see you guys in the next one. Take care. God bless and peace.